In this video, we're looking at the portfolio update of Michael Burry. He was able not only to predict, but to massively profit from the financial crisis of 2008. So he's one of the super investors that I follow, and it is the middle of February, and it is possible to see what super investors bought or sold during the previous quarter. So in this video, we will look at the current portfolio of Michael Burry, and we will look at two stocks. So one stock that he sold in the previous quarter, he reduced his position in the previous quarter, and one stock that he bought. So we'll look at some of the numbers of these companies, at what approximate price Michael Burry made his changes to his portfolio, and what this means for investors in these companies. So let's get started. First of all, if you want to get updates about the portfolios of super investors, Michael Burry, Seth Klarman, Ray Dalio, Warren Buffett, and many others, you can subscribe by pressing the subscribe button under the video. You will not miss a single new video. Okay, so it is possible to see what super investors bought during the previous quarter. So this is the portfolio of Michael Burry. So you can directly search Scion Asset Management in Edgar Search to find these filings. But you also can use services like Dataroma. So yes, you can use original filings, but in this case, using services like Dataroma, the data is represented in a much more simpler and visual way. So if we look at his portfolio in Dataroma, we can see that he has 9 long positions. So these kind of portfolios do not show cash positions, they do not show short positions. And one of the main limitations is that they're available only after 45 days after the quarter ends. So right now, we don't know for sure if Michael Burry still owns these companies. This is the portfolio that was after the fourth quarter. If we sort his portfolio by changes to portfolio, we can see that he dramatically reduced his position in GEO stock, and he also bought 2 Chinese companies, Alibaba and JD. If we combine the position in Alibaba and JD, they are his top 3 changes to portfolio during the previous quarter. So first let's look at GEO stock, and then let's look at Alibaba stock. So we know that he reduced his position in GEO stock in the fourth quarter, and the maximum price during the quarter was close to $12 per share. So it is very likely that he sold even lower, but this was the maximum price. GEO owns private prisons. This stock is still one of his top positions. So if you want to make a deeper dive on this company, please write in the comments below. So now let's look at one of his main additions. So he added Alibaba stock in the previous quarter. The minimum price during the fourth quarter was close to $63 per share. He also made a tweet about Chinese companies in the beginning of December. Also, Michael Burry previously wrote that he likes the strategy to buy stocks very close to their 52-week low and around 10 to 50% higher from that price. So he uses technical analysis. So knowing this and knowing his tweets, it is very likely that he bought Alibaba stock around $80–85 per share. So again, we don't know this for sure. This is based on his tweet, the minimum price, and the logic that he described in his previous posts. So I believe something around $80–85 per share is what he paid for Alibaba. Right now the price is close to 100. But again, the main limitation is that we don't know if he still owns Alibaba at this moment in February. So maybe he sold out his positions in Chinese companies. So this is one of the most significant limitations of 13F filings. Also, Michael Burry wrote in his tweets that he believes that Chinese companies are fundamentally undervalued. So if we look at some of the numbers of Alibaba, we can see that their next 12-month price to earnings is close to 12. So according to this metric, the stock seems significantly undervalued. Also, according to analysts that I was able to find, if the stock continued to grow at this rate, if there is no serious regulations from Chinese government, the stock may bring around 20% cumulative average growth rate for the next 10 years. So according to these metrics, the stock seems significantly undervalued. But Chinese companies like Alibaba and JD bring a lot of risks. For example, the regulations, the questions if this growth rate is sustainable over the next 5 or 10 years, and the Taiwan situation. So yes, Chinese companies seem significantly undervalued, but there are significant risks surrounding them. So if you want to get exposure for Chinese stocks, Alibaba may be one of the options, but we also need to consider the risks investing in Chinese companies. Also, if you want to know more about recent purchases of Seth Klarman, here's the video. If you are not subscribed to this channel, you can just by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.